Let me first start with confirming that the financial results for the quarter have been prepared in compliance with the new Ind AS accounting standards. So that will mean some of the numbers will need to be explained, but they're just as a starting point. And accordingly, we also changed our operating segments to those that are reviewed by the chief operating decision maker, which means we're going to have 4 operating segments, that is home care, personal care, foods and refreshment, and 1 residual segment. So that's at a starting point, that's the main one message there. And let me start with a summary of performance for the quarter. It was a challenging market environment. Market growth slowed down further, both in volume and value. Commodity costs were higher, and competitive intensity continued to remain high. In this backdrop, our business tracked higher than market with sustained margin improvement. Domestic consumer business grew by 4%, with 4% underlying volume growth. The impact of phase out of fiscal duty benefits has come down significantly. It's now about 40 bips in this particular quarter, and operating margins have improved by 70 bips. So that's the broad message. Let me now talk about the performance of the various segments. Home care growth was led by healthy volumes. In fabric wash, growth was driven by the premium segment, with Surf, our largest brand, sustaining its strong growth momentum. In household care, Vim liquids continue to do well, while in water, the strategic interventions taken to play in the wider market are starting to yield results. In personal care, a step up in personal products was impacted by a deflation in soaps. In personal wash, Lifebuoy, Pears and Dove led the category volume growth, while in skin care, the growth was led by the premium segment, with BB and CC creams delivering strong growth. Hair care registered another quarter of volume-led growth, with all key brands continuing to perform well. In oral, sampling activities were undertaken to induce trials in our new Pepsodent relaunch with the best ever flavor. Color cosmetics sustained its innovation-led growth, with Lakme delivering another robust quarter on premium makeup. And in deodorants, Axe did well with the relaunch of the aerosol range during the quarter. The acquisition of Indulekha was completed during the quarter, and the brand has started off on an encouraging note. Moving on to refreshments, the refreshment segment delivered steady growth. In tea, Lipton Green Tea and Natural Care portfolio led the growth through market development, and coffee maintained its strong competitive position in a deflationary cost environment. Ice cream delivered another quarter of robust growth, driven by distribution expansion and sharper in-market execution. Moving on to packaged foods, foods delivered another healthy quarter of underlying growth, driven by market development. Kisan sustained its strong growth on ketchups, while Knorr delivered a robust growth on instant soups and noodles. Let me now talk about our financial performance. As I said, our turnover grew by 4% and PBIT margin improved by 70 bips, resulting in a PBIT growth of 7%. Cost of goods sold was lower by 100 bips due to lower commodity costs and strong savings program. Competitive A&P spends were maintained despite being lower by 60 bips. Employee costs were up 70 bips due to reversals in the prior year. Profit after tax before exceptional items, that is PAT BEI, was up 6% at 1128 crores. And net profit was up 10% at 1174 crores, aided by a one-time write-back of provision for pension benefits. So in summary, under slowing market conditions, our business is tracked better than market with improvement in margins. We have 2 other announcements. As you are well aware, HUL has been making in India for many years. In that vein, HUL intends to set up a new unit to manufacture personal products with about 1,000 crore investment in Upper Assam, next to our existing unit in Dumduma. This is subject to receiving all approvals, and we intend to commission it in early 2017. We have also announced our intention to divest our holding in Kimberly-Clark Lever JV, which manufactures Huggies and Kotex, to our long-term JV partner Kimberly-Clark in a time frame to be mutually agreed between the partners. This is in line with our objective to focus on our core business. So looking ahead, in the near term, market growth is likely to remain muted, and there is concern on the recent market volume trends. However, we are optimistic about the medium-term impact of monsoon and 7th pay commission payouts. The commodity cycle has probably bottomed out, and a higher input costs are likely. We'll continue to focus on driving volume-led growth with improvement in operating margins under this conditions. And our strategy and goals remain unchanged. That is consistent, competitive, profitable, and responsible growth. Over to you guys for questions.
Your volume growth of 4%. I just want to understand how is rural market shaping up? We've had a quarter of monsoon that's kicked in about, say, last few months or so. Talk to us, the market is expecting a volume growth of about 5%. It's coming below expecting about 4%. Do you see volume growth improving going forward? More importantly, how soon do you think rural markets will pick up under the current circumstances?
Still very early days. Yeah, the monsoons have just started a few weeks back. I think we have to give some time before we see an uptick happening in rural areas. But it certainly augurs well. Just like you, we are delighted. And the whole country should be happy. 2 consecutive droughts has taken a toll on the rural economy. We're absolutely delighted that the monsoons, from all indications, are going to be reasonably good this year. And that certainly going into the future should augur well for our business.
But so far no pickup in the rural market.
Early days.
This is Priya from CNBC. Wanted to understand with the commodity prices firming up, how do you expect this to pan out going forward? Because of course it will have some sort of impact as far as margins are also concerned.
Certainly. We play, like I have been articulating over different quarters, we play the different levers of business. Yeah. So there is no one-to-one correlation between commodity prices and the prices of our products. We look at the whole value chain. Yeah, we are relentless in driving efficiencies, and the whole idea is to make ourselves as efficient as possible. And as far as pricing is concerned, there are various factors which go into it. One of them is commodity price, but then we also look at the strategic pricing of our brands. Then we also look at the price value equation, and then we take a decision on pricing.
So even the PFAD prices has been coming up over the last. I want to understand what this results in, because of course it will impact the soaps and detergent segments. How do you see pricing shaping up there, and in terms of, would you look at reducing the kind of discounts?
You look at a scenario. If you take skin cleansing, a few quarters back, our price growth was negative to the extent of 8-9%. Now that has been gradually coming down, and I think in the quarter that has gone by, our price growth has been close to about -3%. So it has been coming down, and that's the trend will happen if the commodity prices remain firm.
But also made two very important announcements as far as the divestment and the setting up of the new plant. Firstly, on the divestment, so what is the kind of anticipation in terms of what funds will you look at raising through that? And secondly, on the factory that you plan to set up in Assam, what are the expectations? How big do you plan to grow the personal care business, and what's the kind of quantum that you would add as far as the production is concerned?
Yeah, first of all, both are intentions to operate. So I think we are in the early stages. That's the reason we have come and announced. And as far as the divestment is concerned, we are commencing conversations with our JV partner, and therefore at an appropriate time we'll come back to you. As far as the NESA factory is concerned, it's subject to all approvals coming through. You've seen the strong performance of the personal products business there, because that's what the plant actually manufactures. And we continue to see that growing going forward, and hence the reason why we have taken a decision to make an investment there.
Also, what's the overall margin figure for the quarter? That I'm not able to get.
70 bps is the improvement in EBIT margins.
So this 1,000 crore investment is total internal accrual?
It's fully on internal accruals.
And your A&P spends also this time are slightly lower. Is this a result of the input costs eventually firming up, so you're not usually you offset it by higher A&P spend? So is it a factor?
See, firstly, if you look at A&P, same time last year is one of the highest A&P spends that is there. It also depends on how activities phase in, phase out. As Sanjeev rightly said, we play all lines of the P&L, and we will be looking for efficiencies in every line of the P&L, including A&P.
And you said your skincare this time was led by premium products. So are you seeing consumers moving more towards premium products? Will that be an area of focus for you going forward?
It has been. If you look at it, how have we been playing the business over the last few years? One is we have been focusing on a core. Yeah, we have to strengthen the core in terms of both penetration, distribution, and brand saliency. The second part of our strategy is market development. Yeah, and we are very pleased with our performance on nascent categories and nascent segments. And the third, of course, is premiumization. Now, these are all the trends which are certainly going to play out, and we are in the forefront leading the trend rather than following the trend.
And clarity on the divestment, how much funds are you looking to raise to that, and what is the kind of, how much of it are you?
As I said, it's our intention right now. I think at an appropriate time we'll come back to you.
It's a 100% divestment, right?
Yeah, so we have a 50-50 JV with Kimberly-Clark, and we intend to divest the entire 50% stake in favor of Kimberly-Clark.
You are going under a big restructuring because there were too many acquisitions that you have done previously. There are some brands that you are hiving off. Again, there were some, the food and refreshment segment that was split. So, is your company going under a big restructuring, or also that includes hiving of employees?
No, let me give you a philosophy. Yeah, no structures remain fixed forever. Like any living organism, structures evolve. And if you look at foods and refreshments, we want to bring in focus both to refreshment business as well as to our food business. And that is the reason why we have now got two separate leaders heading it. So that's absolutely the next step that we have taken in evolving our structure. Yeah, as far as divestment is concerned, this is more about focusing on the core rather than anything else.
So have you
Okay, one at a time.
On the Indonesia acquisition, how much, now that it's been completed, what is the kind of, and you've seen good demand said in this quarter, what is the kind of expectations as far as contribution to the overall top line, and up in a big way now that the acquisition is complete?
Of course, the very intention of buying this brand, this fabulous brand, we are delighted with it, is to make it much bigger. Yeah, today it is mainly in the southern part of the country. So our first focus is to strengthen our position in the southern part of the country where the brand has strong footholds. Once we have done that, then we would certainly be looking at taking it to other parts of the country. हाँ जी,
एम्प्लॉइज को हाइव ऑफ कर रहे हैं कॉस्ट कट करने के लिए, इज एनी सच स्ट्रैटेजी?
देखिए, हम लोग का ग्रोथ बिजनेस है, या तो हमारा फोकस ये नहीं है कि हम आदमियों को हाइव ऑफ करें। यार, कट कॉस्ट का नहीं है, हमेशा हम फोकस करते हैं कि हमारी पूरी वैल्यू चेन में हम एफिशिएंसीज कैसे लाएं। फोकस रहता है एफिशिएंसी और इफेक्टिवनेस में, वो हमारा रहता है। हम ग्रोथ बिजनेस हैं, हम ग्रोथ कंट्री में हैं, एंड वी आर वेरी ऑप्टिमिस्टिक अबाउट इंडिया इन द मीडियम टू लॉन्ग टर्म, and we are absolutely delighted with the way our business has been shaping up, the kind of capabilities we are investing in. So that's all our focus has been on. How do we get into new categories? How do we grow? How do we get new brands? And how do we keep building our capabilities?
So आपने न्यू ब्रांड्स की बात कही है, तो क्या जिस तरह से कस्टमर का जो रुझान है वो आयुर्वेदिक की तरफ अब ज़्यादा बढ़ता जा रहा है, क्या HUL भी इस सेगमेंट में एंटर करने वाली है आने वाले दिनों में कुछ प्रोडक्ट्स?
देखिए, अगर आप नेचुरल की स्पेस में देखें, वी हैव अगेन हमारा जैसे ओरल में हमारा क्लब एंड सॉल्ट है, हम आयुष हमने इसको रीइन्विगोरेट किया है, ये अभी ई कॉमर्स में ही है प्राइमरीली, बट वी आर गोइंग टू स्ट्रेंथन दिस पोर्टफोलियो। हमने अभी सेंट टाइप्स लॉन्च किया है एक्सक्लूसिवली ऑन ई कॉमर्स, या और हमने फेयर एंड लवली आयुर्वेदा को रीसेलेक्ट किया है। So we clearly see the trend in Ayurvedic, in naturals, and again you have to understand that natural is a pretty big subject, and different people describe and define natural in a different way.
तो उस मेंटालिटी या उस चीज से बाहर कैसे निकला जाएगा कि अगर कोई मल्टीनेशनल है तो डेफिनेटली जिस तरह से कंपटीशन पतंजलि की तरफ से आपको मिलता आ रहा होगा, कैसे देखते हैं उसको, किस तरह से माइंडसेट में चेंज करने की कोशिश की?
देखो, हम लोग कंपेटिटर को नहीं देखते हैं, हम कंज्यूमर को देखते हैं। हमारा जो पर्पस है कंज्यूमर की अनमेट नीड्स को मीट करना, और वहीं पे हम फोकस करते हैं।
Just want to understand what were the particular headwinds that you faced over the quarter. One is the fact that the lower commodity cost benefit will most likely be done with this quarter. Starting next quarter, there will be no commodity cost benefit. Talk to us about the headwinds that you witnessed over the quarter, and more importantly, now that the commodity cost benefits goes away, how do you plan to deal with it?
Look at the last few years, the way we have been playing the game. When commodity costs have been going up, which was in 2013, 2014, we still delivered on a 4G agenda. When the commodity prices came down, when the markets became soft, we still delivered on a 4G agenda. So we are very clear that that's the agenda, and we will play the different levers of business to ensure we deliver on the agenda.
So then we expect a price hike going forward now that...
Like I said, there is no one-to-one correlation, but certainly input costs do play a role in determining how do we price our products.
So, but at least in the soaps and detergent segment, because काफी सारे क्वार्टर से लगातार प्राइस कट वहाँ होते आ रहे हैं. इस बार आपने कहा, इस बार भी आपने प्राइस कट लिए हैं. क्या वहाँ ये जो प्राइस कट का सिलसिला है वो रुकेगा एटलीस्ट अगर प्राइस हाइक ना हो तो?
देखिए, ये तो आप जनरल बात कर रहे हैं, एंड मैं जनरल आंसर नहीं देना चाहूंगा. मैं सिर्फ आपको फिलॉसफी एक्सप्लेन करता हूँ कि हम प्राइसिंग कैसे करते हैं. हम डिफरेंट लीवर्स ऑफ बिजनेस देखते हैं, हम ट्रेड सपोर्ट देखते हैं, हम मार्केटिंग स्पेंड देखते हैं, हम कंज्यूमर प्रमोशंस देखते हैं, हम हमारी कॉस्ट सेविंग एजेंडा देखते हैं, हम सबको देखते हैं कि हम कैसे ऑप्टिमाइज करें. फिर हम स्ट्रेटेजिक प्राइसिंग देखते हैं, हमारी ब्रांड की किस मार्केट के हिसाब से रिलेटिव में कहाँ प्राइसिंग होनी चाहिए. हम प्राइस वैल्यू इक्वेशन देखते हैं ब्रांड का, और तब प्राइसिंग करते हैं.
राइट सर, लेकिन जो रॉ मटेरियल का कॉस्ट है वो सबसे बड़ा फैक्टर था इस जो प्राइस कट लिए थे आपने सोप एंड डिटर्जेंट में.
बिल्कुल.
तो अब क्योंकि फिर से रिवर्स हो चुका है, तो क्या हम
इसलिए तो आप, जैसे मैंने आपको समझाया है कि पहले जैसे 3 क्वार्टर पहले हमारी जो प्राइस नेगेटिव ग्रोथ थी वो करीबन 9% नेगेटिव थी, अभी करीबन 3% के करीब है, और स्लोली देख रहे हैं कि ये जो प्राइस नेगेटिव ग्रोथ है ये खत्म होती जा रही है. और ये आप भी समझना चाहिए, जैसे एनिवर्सरी होगी, देन यू कम टू द एंड ऑफ इट साइकिल. That's our hope as well. Absolutely. I think the whole consumer goods industry is hoping that good monsoon, is more money in the hands of consumers, will lead to more consumption.
By when do you expect that to reflect in your books, sir?
See, that will be crystal ball gazing. But the way things are today, I think the volume growth and the value growth in the industry is the softest in the last 10 years. That's where the scenario is. But, always if you look at a market, there'll be times when the markets will be high, there'll be times when the markets will be low. But it is important that you remain consistent to your strategy. We don't play just based on a quarter. We are here for the long term. Our focus is on the long term. We are not going to shy away from investing behind the new categories. We are not going to in any way dilute the pipeline of our innovations. So that's where our focus is going to remain.
So also tell us about your ad spend, sir. जिस तरह से target audience, target जो customers हैं, आपका ad spend क्या रहेगा इस?
अभी देखिए.
Same line. It's on the same line. So, the last couple of quarters, in fact, for most FMCG companies, I've seen very aggressive A&P spend. So, do you see that as a trend coming off, or do you think A&P spends will be relatively lower compared to the past couple of quarters?
See, difficult to tell what my competitors will do, but I can speak about how we play the A&P. First is it is dependent on the activities which you have in the quarter. A quarter where you have more innovations, that's where a heavy spending happens. Then also we look at competitive spending. We don't want to dilute our share of spend versus share of market. So there are certain thresholds which we focus on, and we will keep spending on it. For us, the brand saliency, the brand equity is very important, and we would never do anything which dilutes the saliency of our brands. We don't give market shares at a category level and a brand level, but I leave you to guess. While the volumes, the total volumes in all the categories in which we operate were flat to slightly negative, our underlying volume growth has been 4%. So that should give you an indication we have been growing ahead of the market. See, I'm not going to sit here and take price cut as a strategic decision. Yeah, because we are into branded packaged products. Yeah, we look at price value equation. We don't look at just the pricing of a product, and that's how our consumers perceive our products as.
With the whole trend of the natural products, when it comes to food, it's more about healthier products. So in the food space, are you looking at more of such launches? Is that on your mind?
See, for us, we have been very pleased with our foods performance. Yeah, and this is not a 1 or 2 quarter story. Over the last few years, we've been growing foods at a very healthy pace. For the last few years, our focus has been very clear. Knorr in every kitchen, Kisan in every tiffin. Yeah, and I'm very pleased with the way that has evolved. Now we have a pipeline of innovations. Early this year, we have launched masalas under the brand name Knorr, and we are certainly going to keep expanding our portfolio. We are completely committed to growing our foods portfolio.
But while doing that is, promoting them as very healthy options.
Absolutely.
Is that a...
Absolutely. That's again, just like naturals, healthy food is a trend which is shaping globally.
You take our Kisan positioning completely, you'll not talk about real tomatoes.
Yeah.
And then the whole build of the brand itself is around real tomatoes and the goodness that brings with it.
Or you take a refreshment, say a green tea. That's been on a fabulous journey. Yeah, green tea has all the properties, good properties of tea, and because you don't take it with sugar and milk, it becomes even a much more healthier drink. Anji.
By
4% was volume and pricing was flat.
Has that changed?
Yeah, strategy.
The domestic market now looking at you.
The first is, it's not a zero-sum game in the country. Yeah, and a good competitor is good for the business. It doesn't phase us. In fact, it gives us even more energy to serve our consumers better. Yeah, and as far as the strategy is concerned, it is best articulated in the 4G that we keep talking about. Our growth has to be consistent. It has to be competitive ahead of the market. It has to be profitable. When we say profitable, we talk about modest improvement in margins, and it has to be responsible. And if you look at our growth, is what the way it has come out. Our volume growths have been very steady over the last 3-4 years in the 4 to 6% band. Our margins have grown consistently. Last 2 fiscal years, they grew at 90 bips per annum. This quarter, they have again grown by 70 bips per annum. Yeah, we do a lot of investment in ensuring we reduce our environmental footprints. So that's been our focus area, and that's how we are going to keep playing our game.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.